Hey everyone, and welcome back to Save Station. So this video I have for you today is going to be a bit more serious from pretty much all my other videos I've done so far. I would like to take some time to talk about Nintendo, but instead of hardware or software speculation, I want to focus specifically on Nintendo Company Ltd. and my personal experience with them within the stock market. To be upfront, I am no professional stock market analyst, but I have owned stock in Nintendo Company for about 5 years. So I have some meaningful thoughts on how the company is trending and what their future might be like. I do understand that this might not be a super exciting topic or anything, but I still think it's pretty important. Money is how the world runs, and it's very important for a company, especially as big as Nintendo. So without further ado, let's get right into it. Alright, so what is a stock? Plain and simple, stock is a share in the ownership of a company. Stock represents a claim on the company's assets and earnings. As you acquire more stock, your ownership stake in the company becomes greater. Whether you say shares, equity, or stock, it all means the same thing. It's all about putting money behind a company that you think is successful and will continue to be so, or a company that has potential to be very successful in the future. This would also mean that you have confidence in this company to do well. If the company trends upward and their stock value rises, the money that you invested in them will increase. Of course, there is risk involved as well, though. For whatever reason, if the company you invested stock in starts doing poorly and confidence is lost, the stock value of the company will drop. So confidence and risk are two factors when deciding on a company to put your money behind for potential gain. So I did this very thing with Nintendo. First, I set up a brokerage account with Charles Schwab, which let me buy and sell stocks quickly online for a small fee. I would highly recommend doing this if you're interested in buying and selling stocks in the future. I then looked at Nintendo's stock value, which was sitting at $19 per share. So say I had $1,000 to put behind Nintendo. I could then buy roughly 52 shares in the company. I was putting out a decent amount of money into a company I hoped would do well enough to have their stock value increase so that my $1,000 could hopefully turn into at least $1,500. This would require Nintendo's stock to rise from $19 to roughly $29 per share. At the same time, if they do poorly, I could end up losing money. I was hoping that the Wii U would be successful enough for Nintendo to do this very thing. Who knows, maybe it could be as successful as the Wii, which brought Nintendo's stock up to around $80 per share back in 2008. Well, we all know how that went. The Wii U was an utter failure, and I felt like a fool for putting money behind Nintendo. However, I did not pull my shares out of the company at this point. This would mean I would lose money since the stock value dropped below the initial $19 I had bought in at. I decided to leave it alone and watch the company over the years and see what they had planned for the future. This began the slow upward trend for Nintendo. They were able to start selling the Wii U for a profit instead of selling at a loss early on. The 3DS continued to do well. Amiibos became extremely popular and created a lot of a buzz around the company. And most significantly, Nintendo started talking about mobile device options for their games. It was at this point that I bought even more stock in the company. Why, you ask? Well, because just at the mere mention of mobile developed Nintendo games, the company's stock rose considerably. Putting their characters out on other platforms would get their property more recognition and sell like hotcakes. Their several timeless franchises and characters are where all the company's value lies. They can choose to license out those characters in a number of ways to make large amounts of revenue. Well, the numbers are in, and we can see the effect that Pokemon Go and Mario have had on Nintendo's stock value. Pokemon Go set record-breaking numbers on the App Store, and currently 500 million people have downloaded it. Nintendo's stock value doubled from $18 to roughly $36 in a few days. However, it is important to pay close attention to what actually happened with the stock value. It dropped off significantly because Nintendo does not fully own Pokemon Company. It is also worth noting that Niantic, the developer of the game, would also get a significant cut of the profit. So Nintendo actually wouldn't profit that much from this huge success. So when stockholders found this out, many of them bailed. This caused the drop-off. But it is important to note that the stock still stayed at a respectable amount. Like me, many still saw the potential in the company. They had already announced that they had other mobile games in development for the future. Then, the Super Mario Run announcement hit. This caused Nintendo's stock value to rise again, this time with a 25% increase in one day, which is pretty substantial. This was just from the game's announcement. Imagine when the game actually comes out later in the year. Of course, we can't forget about Nintendo's wildcard though, the ever-elusive NX. Its inevitable announcement and launch will likely allow Nintendo's stock value to surge even further. So with all that in mind, here's the big question. Should you buy stock in Nintendo? Putting a substantial amount of money behind a company that you're not confident in would never be a wise move. So I would recommend doing your own research before making this decision. Risk of losing it will always be there, so make informed decisions. All of the points I laid out show a Nintendo that is trending up, and will continue to do so most likely. Ultimately, I would say yes, but wait till after the NX reveal and gauge how the company is doing afterwards. The reward outweighs the risk in my opinion. Their mobile entrance has been incredibly strong, and will most likely continue. They are about to announce their next game console as well, which will most likely do better than the Wii U did. And they are starting to branch out and put their characters out in the wild, beyond just gaming. This includes theme parks, rumored TV series, books, collectible figures, etc. Taking all that into account, I see there being a greater chance for success rather than failure. Now before I end the video, I just need to bring up one more point. The government will tax you when selling stock. In fact, if you buy and sell a singular stock within a year's time, the government will tax you considerably more. It's to encourage people to support the companies for a longer period of time, which in turn keeps the market a bit more stable. So if you buy Nintendo stock, I would recommend hanging on to it for a year and then sell if it has made you a decent profit. Alright everyone, thanks for watching, and I hope I was able to shed some light onto this subject. I really do believe Nintendo is poised to make a strong comeback after a weak few years with the Wii U. We have just seen the beginning of their mobile plans, and they are looking extremely positive. But don't take my word for it. Make sure to do your own research on the company before investing your well-earned money. Please feel free to ask questions or add to what I had to say regarding the stock market and Nintendo down in the comments section below. And with that, keep the NX hype alive, and I will see you at your next save.